Hey everyone, it's Zach back with a new mortgage video. Hope you're all having a happy Monday. If this is your first time seeing one of my videos, welcome to my channel. If you're a returning viewer, welcome back, where I'll try to demystify all things mortgage related. If you find this content helpful, please like and subscribe. So on today's Monday mortgage market update, I'll talk about last week and specifically the Fed rate decision and Jerome Powell's comments afterwards, how that affected things. And today we've got some pretty significant news on the China tariffs and how the market has reacted to that. And then I'll talk about this week's a couple of the other significant reports on the horizon. So last week there was not a lot of data. However, the big news was on Wednesday, the Fed chose to maintain current interest rates. That was widely expected. After the decision, Jerome Powell at his press conference had a couple interesting comments, specifically mentioning the direct quote he said was the higher potential for the Fed's dual mandate working in opposition. What that translates to is a higher probability of stagflation. That's where the Fed's role is to keep inflation low and keep unemployment low. What if both go up? How do they balance that? And essentially what he said is that they would prioritize whichever one is further off from the mark, which is pretty easy to say what that mark is for inflation. Everyone knows it's 2%. They mention that at every meeting just about. With unemployment, it's a little harder to say what their kind of target rate is. I would say somewhere around where it is now, 4% would be considered positive. The historical national average has been more like 5.7%, but more recently, 3 and 4% has been kind of the standard. So if we were at 6% inflation and like 5% unemployment, I think the Fed would be hiking rates because they'd be more focused on the inflation. If inflation ticks up to like 3% and unemployment goes up to like 8%, then I think they'd be more focused on unemployment and would probably cut rates. I thought that was interesting. Powell was very clear that we are not at a place of stagflation right now, and we're actually in a pretty good place based on the most recent data to wait and see. So very much do not expect any rate movement in June and possibly months past that as well. I'll talk about that a little more, talk about tariffs. So big news today, the US and China agreed to a 90-day pause on these massive tariffs and reciprocal tariffs that they have announced, both over 100% and baseline tariffs down to 10%. So stocks have spiked as a result of this news, especially stocks that heavily import from China. However, mortgage rates have actually ticked up a little bit, and I think that's just the inverse relationship with the stock market, which again, in general, that is a good thing that we still have this relationship. We had kind of a split a few weeks ago where both stocks and bonds would get worse at the same time or get better at the same time. And that's not a good thing. And I think a lot of the progress on tariffs has been due to that break in the relationship. I think members of the Trump administration like Scott Bessent were very concerned by that and were actively and have been actively trying to maintain some sense of normalcy. So obviously this is another pause. It is by no means a end place when it comes to tariffs, specifically with China. So while it's been viewed as a good thing so far, and this is what we did with all these other countries, everyone but China essentially was just a 90-day pause, I don't think this is the end of the volatility, because until we both get to a final place, final trade agreements, tariffs across the board with all these countries, and we have at least a month of data reflecting on those numbers, there's going to continue to be this volatility. With that said, the markets are always trying to project what is going to happen. They're not just going off of, here's the data today, this is the place we're in today. We're not going to think about the future at all. They're constantly thinking about the future. That's I talk so much about the expectations of Fed rate cuts. That's an example of that. So obviously, it's being looked upon as a positive thing for stocks today and leading to overall growth in the US economy. The other big reports that are coming out this week are mainly focused on inflation. So tomorrow, the biggest report of the week comes out, and that is Consumer Price Index, or CPI inflation. Now, this is important because it's the first inflation report to come out since April 2nd. So it'll be interesting to see how the US economy has reacted to the first month of these tariffs. The market is expecting lower year-over-year inflation compared to last month when it comes to headline CPI, and they're expecting to stay the same when it comes to core CPI. So that'll be interesting to see how that plays out. Retail sales, which went up quite a bit at the last report, and that was actually looked upon as a good thing, as one of these reports showing front loading in purchases. That's expected to come down. That'll also be an interesting one to see. And producer price index is another one that comes out this week. All three of those kind of paint a good picture of the inflation reaction to these tariffs, and they will heavily influence, and you can pretty easily predict, personal consumption expenditures, which is the inflation report that comes at the end of the month that the Fed cares the most about. So overall, it's definitely a good thing that we're coming back to this more normal market with stocks and bonds moving in opposite directions. However, it remains to be seen whether these inflation reports are really going to matter and move the market in the way that they normally do, or whether they get kind of shrugged off because we still don't know what the end game with tariffs is going to be. And if we get dramatically different final tariffs than these preliminary numbers and what we're going off of right now, then the data that came in last month doesn't really matter. So I'll be very interested to see how the market reacts to the inflation data this week. As always, if you have any questions or comments, shoot them below, or feel free to call, text, or email me. But thanks for tuning into this video, and I will see you next time.